Well, it's a strange time for growth stocks, and Jim Cramer's show is just part of financial entertainment. Remember, financial entertainers make their money in entertainment and not finance. For instance, Jim Cramer's show is a sales funnel for memberships to CNBC's Investing Club. We're not saying that financial entertainment is bad, but as an investor, you need to ask yourself whether you're looking for financial entertainment or you're looking for information to help you make an investment decision. In today's session, we're going to have a look at what makes up financial entertainment and investment information. Stay tuned. Well, a lot of ARK Invest interviews take place on CNBC, and as a result, they tend to have a lot of commentary on her funds. Sometimes it's really solid. Other times, it's a little shallow or pressed for time, and then there are ripple effects potentially out of ARK. But they say we think they can manage their cash flow and use the liquidity of some of its large cap positions to mitigate any impact from those flows. Now, Jim Cramer delivered a memo to Cathie Wood which was urging her to close her funds. But that's pretty much worrying. Why would ARK Invest close their funds? Could they really even do that? Maybe you should stop allowing more inflows and close the ETFs. Close the funds rather than launching more ETFs, raising limits, buying your own ETFs within your own ETFs, and whether that was a question you at least asked yourselves over these massive inflows. Well, it's not possible to close an ETF, unlike a mutual fund. It's not impossible, though. And if it's one thing that we know, it's that investors love it when you change the rules. That aside, Jim Cramer is talking about closing ARK's funds due to flows. That's the crazy amounts of money that flowed into ARK's funds when investors bought them last quarter, as well as the money that flowed out of ARK's funds when investors sold in the past quarter. On paper, it probably sounds reasonable to suggest closing the funds. That way, Cathie Wood can focus on fixing the damage instead of worrying about taking in new money. We're saying on paper because that's not actually what's happening with ARK Invest funds. And Cathie Wood got a chance to respond to Jim Cramer's memo to close her funds. According to Wood, Cramer is talking about the ETFs, and it's not possible to close an ETF. Wood says that it's just not possible. She further notes that he's referring to the mutual fund industry, and that's not what ARK Invest is. Wood also says that the other mistake that commentators are making is that they don't understand that she has nothing to do with the flows. In other words, the ETF ecosystem outside of ARK, the market makers, the authorized participants, are creating and redeeming baskets of stock, which are the stocks ARK is invested in. Wood says that she's not investing, but she's rather making investment decisions. Okay, so Cathie Wood directly responded to Jim Cramer, letting him know that she doesn't run a mutual fund and closing an ETF isn't something that you can actually do. And because of the way ETFs work, Cathie Wood is only responsible for adjusting the weights inside her funds. Those are the investment decisions that she's talking about. So Jim did what any normal person does when they make an honest mistake. He apologized for the confusion. In a nutshell, Cathie Wood is not suffering from redemptions. However, these inflows and outflows still matter to her performance. Here's the bottom line. When you look at the fund's flows, ARK Invest is no longer popping up the turbocharged growth stocks, which make the recent rebound feel a lot more significant. Maybe if this group keeps climbing, Cathie Wood can get her bazooka back. But until then, the Wood stock will rise or fall on their own. The thing is, ARK inflows are nothing compared to Cathie Wood's actual bazooka, which is the buys and sells that she makes in those funds. Jim Cramer and the other commentators at CNBC are making the same grave mistake. Imagine Cathie Wood did close her funds. No one can buy new shares. That would mean her fund flows are now zero. Cathie Wood now only manages the funds for her existing shareholders. The world keeps moving and news keeps coming out. The share price inside the funds is still moving up and down, and Cathie Wood is making investment decisions by rebalancing the funds accordingly. There's been a massive sell-off as far as ARK Invest stock is concerned. What about this? Does it bother Cathie Wood? ARK Invest founder Cathie Wood said the sell-off in unprofitable tech companies that has hit her investment fund's performance had only increased her conviction in her positions as she declared that innovation is on sale and urged investors to look beyond the recent market volatility. U.S. stocks closed lower in the latest volatile session as investors prepared for the U.S. Federal Reserve to raise interest rates as soon as March. Wood says that many people associate volatility with risk, yet it doesn't always have to be that way. According to Wood, ARK Invest uses volatility to its advantage and concentrates towards the highest conviction names, which tend to work very well as the ARK Invest goes through the corrections. An improving growth outlook and central bankers' shift to a harder line on inflation has triggered an investor rotation from high-growth stocks, such as those favored by Wood, to value names and sectors tied more closely to economic recovery. But Wood urged investors to look beyond the recent market turmoil to take advantage of cheaper valuations, pointing to ARK Invest's 5-year time horizon. Well, we've said a lot about ARK Invest, but what's in the pipeline for Tesla stock? Jim Cramer broke down the top holdings in star money manager Cathie Wood's ARK Innovation ETF, saying he likes the setup in most of the closely followed fund's largest positions. Cramer said that even after all these years, Tesla doesn't have much competition as it sells cars everywhere. According to Cramer, Elon Musk is the best there is. Cramer believes that growth stocks in ARK's portfolio, such as Tesla, have gone down such that he'd rather buy instead of sell. He goes on to say that Cathie Wood stocks now represent some excellent opportunities. Tesla's stock performance has been incredible for a long time. It has long been more valuable than companies like GM, and it became the most valuable automaker almost 2 years ago. The automaker beat expectations during the final stretch of 2021 with double-digit revenue and gross margin growth. Elon Musk said Tesla sales will comfortably grow above 50% in 2022 compared with last year despite supply chain problems, thanks to their new factory starting up and current plants boosting output. Still, a lot of people were disappointed that the company failed to articulate plans for a lower price model. As if that wasn't enough, Elon also mentioned that the supply chain issues are set to continue in 2022, and the much-anticipated Cybertruck isn't due until later in 2022. These are some of the things that cause frustration amongst investors. And as long as investors aren't happy, there'll always be a massive sell-off. But then 2021 was a breakthrough year for Tesla. There should no longer be any doubt about the viability and profitability of electric vehicles. With deliveries up 87% in 2021, Tesla achieved the highest quarterly operating margin among all volume OEMs, thus demonstrating that EVs can be more profitable than combustion engine vehicles. Tesla is focused on growing its manufacturing capacity as fast as possible. The company aims to achieve 40% average annual growth in vehicle deliveries by ramping up production at its gigafactories in Berlin, Germany, and Austin, Texas. On the cash and profit fronts, Tesla assures investors that it has sufficient liquidity to fund the product roadmap in line with its long-term capacity to grow production, with operating margins continuing to grow over time. Investors should keep watching out for Tesla stock in 2022. We believe that for the company, there won't be any disappointments this year. Well, we've come to the end of our session today. Be sure to like, share, and subscribe. Stay safe, and we'll see you next time.